Hello, dear traders. Let me know if you can hear me, and we're gonna start in a couple of minutes. Let's wait maybe for a minute or two till all members connect to our meeting. So anybody there, can you please write something to the chat to see that you're present? Okay, colleagues, I think that we can start. Let's start actually from the questions we have here on Telegram. So regarding the survey, most of you are interested in trading gold. It's strange, but BTC, which is less volatile, but it is on all-time highs. It is also like popular, but not so popular as gold. So then we follow the next. The next question is about analytical tools. 36%. Okay, news trading. 24% is interested. And obviously, how to pass the challenge and risk management questions are in the top of the questions as usual. And also, how to nail volatility is around 20%. So I think we can start from the most interesting question that we have here. It is about how to trade gold. Let's start from the basics. Those of you who have an access to the Pro course in our trading academy here at SabioTrade, you may have noticed that we have strategies for different assets. And obviously, my first advice for those of you who seek for a proven backtested strategy for gold, this advice will be to check the strategy from the lesson number 8, which is called Golden Days Strategy from the Trading Academy. Because here in this lesson, we speak about how to trade gold. We give you a proven trading strategy with the backtests that were made starting from 2009. And actually, this kind of strategy, it shows good profitability from year to year. So this is the easiest way how you can master trading gold. But answering this question, how to trade gold in a broader perspective, because obviously I cannot dedicate this video to explaining how does the strategy work. We usually work on the strategies individually with our traders on mentoring sessions. So we'll speak about general features of gold trading, and also we'll touch the next question that you also asked is what analytical tools we can use. So let's start from the analytical tools and then we'll apply them to gold. As you know, we have different automated services here at SabioTrade. We have two trading bots. One bot is called Candle Sequence Bot, and this bot notifies us every time when we have a sequence of same colored green or red candles, which means that market may be locally overbought or oversold. When you see 5 green candles or 6 green candles on an hourly time frame, it doesn't mean that you must buy or sell instantly. It's just an alert that tells you that, hey, please pay attention to this asset. It may be interesting for you to enter a trade. But then you have to make your own analysis. You have to look for potential support lines, resistance lines, trend lines. Maybe if you use some other indicators that also show divergence, they show if the market is overbought or oversold according to their levels, you can combine this knowledge and find good entry points. The next bot that we have is the bot which is called Price Impulse bot. By the way, those two bots are completely free for all our traders, and later I will send the links to our chat here on YouTube, and you'll be able to join these bots after this meeting if you have not joined them yet. So this bot shows us impulses, or to be simple, it measures the candle's body, the distance from opening to closing of each candle on a chosen time frame, and also shows you if the market is locally overbought or oversold. You may guess that we use these kind of bots to understand if the market is locally overbought or oversold, and then we're going to enter the trade following the current market situation. Let's switch to one of the trading platforms where we have all these indicators fully visualized, and we'll check gold on 4-hour time frame. Here we are. Let me scroll to the beginning of this chart, and you can see that here we have different numbers. First of all, pay attention that we have numbers that are in purple. They show the number of candles, same colored candles in a row, and also we have the numbers in orange that show us the price decline in percentage. We're gonna combine these two bots in one and look what kind of trades we could have made trading with gold since the beginning of this year. So let's scroll this chart to the beginning of 2025. I think we'll find many interesting trades, and by making this backtest, you'll ensure that this kind of analysis works, or maybe you'll decide to investigate other time frames. Maybe somebody trades 5-minute time frame, 15-minute, 30-minute time frame. You need to check it on your own, but I prefer to trade higher time frames. The minimum time frame I personally trade is in hourly, but mostly, yeah, I spend time trading on 1 hour, 4 hour, and daily charts because it saves a lot of time and it allows me to trade different strategies simultaneously. So let's start from the end of the previous year, and here you can see that we have this previous local high and we have this price decline, and here you may notice that we have the situation when the price breaks through the previous local high. This was the last high before the price started to drop, and obviously that in a new year, starting from January, actually here it is, it can be our first entry point. So when we see a number of trades, let's say a number of candles, 1 candle, 2, 5, or 6, we also need to understand the context where this sequence appeared, and if we have so-called inner candles in this sequence. Let me show you this. For example, if we have this sequence of 9 candles, please pay attention that some of them are hidden in the body and shadow of the previous candle. So when we have this kind of inner candles, we often may not count them because they don't show us the price growth. So sometimes it's better to have 5 full-bodied candles in a row rather than have 9 or 10 candles with small bodies and with a lot of inner candles. So the first idea that we can use here, personally, I do not suggest you to sell gold because I know that gold is in a global uptrend, and statistically it's better to buy it. But still, when we have good situations when the market is really oversold and you trade with the short stop losses, it may make sense. So let's check this current situation. The market actually started its recovery after the drop. We got a sequence of several candles in a row, and actually after we broke the previous, we cannot say that it is a global local high, but it was the starting point from where market started to decline, and we have this seventh candle that closed above this level. We have a sequence of candle. We don't have a huge candle, so we use, in this case, we use only one indicator. I mean this one, the sequence of candles. And it means that we can potentially look for a selling entry point. Let me highlight it just for you to see the potential entry point and to understand how actually these bots work. And obviously that when we sell right here, we need to hide our stop loss at least above the previous local high. So this kind of level, it can be somewhere here. Let me draw it right here. And as you can see, this trade, if we were trading this strategy at that time, even with a ratio of profit to loss of 1-to-1, could have been closed with a profit. So this will be our first, let's call it the first profitable trade. Actually, I like making this kind of back tests because when we speak about theoretical strategies, that something may work or may not work, but we do not apply it to the real charts, we simply waste our time because we don't know if the strategy will be actually working. Let's check the second case. We also had 5 candles in a row, but if you look attentively, you'll find that the first candle, let's be honest, it was not really big, but still okay. Even if we count it, we're not gonna find any support or resistance level that actually we need to find to get the ground from which we can bounce off. So it means that these kind of patterns which appear inside the movement, here for example, or maybe they can appear here or here, they mean nothing till they reach a certain strong potential level of support or resistance. So the next potential entry point could be found here, because here we had actually 6 growing candles in a row, but if you pay attention, the second candle was an inner candle, so it was inside of the first candle, so we don't count it at all. And speaking about the levels, the main rule that we need to understand that we had this prior resistance level. This level was actually broken, and then we see that market speeded up, so we're coming to a culmination. Usually we need to enter on the 5th candle. This is the basic rule for a 4-hour time frame. But in this case, the second candle was the inner one, so we can presume that the entry point could have been placed here above the 6th candle. I'll show you a couple of examples on gold, and then we can also check other instruments to see if this theory works globally. Then you can see another case. We have 1, 2, 3, 4, 5. Let's be honest, this third candle was somewhere in the middle, so actually the entry point should have been made right here. And by the way, if you check, yeah, we are selling against the trend. Actually, we're doing the things I prefer not to do. But if you do it correctly with short stop losses and take profits, you may succeed in intra-week trading. Yeah, we trade here intra-week, and each vertical line on a 4-hour time frame. This platform divides one trading week. Then we have a sequence of 7 candles, but let's be honest, this is a bad sequence, yeah, because obviously 5 candles are inner candles within the frames of the first candle, and there is no support level triggered here with this movement, so we simply skip it. Let's move forward. So we have another case. We have 8 candles here, but let's check it again. A lot of inner candles. no support or resistance level broken, so it is not interesting at all. Then we check the next case. We have these like 3 candles, and let's be honest, these 3 candles, they may be counted as one candle because these are like almost dodgy. So again, when you have this candle sequence but it does not change the price, it means nothing. Yeah, we need to have this combination. We need to have a strong impulse and we have a break through the like local support or resistance levels. So then from my opinion, yeah, it doesn't make sense to trade with this candle, because if we count all these candles for, let's say, one candle, then we have 2, 3, 4. Obviously this is not the best option that we can use, but maybe somebody could have decided to enter right here because we had like these candles close slightly above the first one. No problem, I can actually make this kind of marking here and we'll put it as a potentially losing trade, just to make it interesting, because somebody may think that we are choosing only the best entry points and we filter the ones that are not good. So let's move on. And here we have an interesting case. We also have 5 candles and we have this level. And here we can see that we have one candle, then we have another candle. The second is slightly above and the third is here. The fourth is in the middle of the third. So despite the fact that we're touching this resistance level, we don't have this rule, so we simply skip it. Then we have one falling candle without sequence. If you remember, we had the second potential indicator that shows us that we can enter the market, and it shows that during these 4 hours the price declined for 1%. This is a huge decline. And if we check the previous like local support level, we can see that actually the price came to the support level at this point. Obviously that the perfect option is to wait till this level is broken, but originally when we have this kind of situation and we don't pay attention to wicks, because in most cases we analyze closed candles, this could be a potential entry point to buy. So let me mark it, and then we'll speed up a little bit and check all the other trades, and I think we'll shift to another questions. So this kind of pattern, we have 6 candles. This one is the inner candle, so we have 1, 2, 3, 4, 5. We have this resistance level. Here is our entry point. Yeah, here is your success actually would have depended from the stop loss. If your stop loss would be higher, it could be a profitable trade. If you use the tight stop loss and take profit with more than 1-to-1, it could have triggered a stop loss. Then another case, we have this falling candle, but we didn't reach the support level, so we skip it. Then we have 7 falling candles in a row. We actually have we have several levels that were broken. So we need to see that this candle is an inner one. We don't count it. This candle is also inside. We don't count it. So we have 1, 2, 3, 4, and we have 5. So this is our next entry point. And this is the way how actually most of the strategies are built. So we simply analyze the market, and it takes a lot of time. I spent many years by creating different strategies, and in some cases it was manual work, like I'm doing like right now. Sometimes I was using trading algorithms. Actually, all the strategies are automated, and I was backtesting them using the strategy tester. And the specific feature of almost all of the educational courses that we have here, that most of them were backtested automatically. And it means that choosing any strategy, no matter what kind of asset you would like to trade, gold or Bitcoin or Australian dollar, you can be sure that this strategy was backtested and it has proven trading results. This is what really matters. Let's shift to the ending of the chart and see if we had any interesting trades in the recent days, and we'll switch to another question. So we had this local resistance level, it was a local high, and here we had 1, 2, 3, 4, 5 candles. Here was our potential entry point. Again, here everything depends on your stop loss. If your stop loss was tight and profit to loss ratio was 1-to-1, okay, it would have worked for you. If not, you would receive the stop loss. Then let's move on. Another case, we had 6 candles here, but this kind of movement appeared in the middle of nowhere, in the middle of this consolidation, so we don't count it. And here we didn't have many candles. Some of them were inner candles, so we skip these signals, and so we skip this signal. But here we have one good signal. Yeah, we have this previous extremum, yeah, previous local high. On a smaller time frame. Actually, we are looking not on the all-time highs, because otherwise we'll be trading only in corridors, but we also trade in trends. And as for a trend, yeah, this is a local resistance level. And we have first candle, we have second, third, fifth, fourth, fifth. Here was our entry point, and here again everything depended on a stop loss. If you would be hiding your stop loss above the previous local high, for example, then with the ratio 1-to-1, you could have made some profit here. And let's check the last trade, because we have actually many trades here. We have 1, 2, 3, 4, 5. Here was the potential entry point, and maybe we would receive the stop loss here, but it depends on the size of your stop loss. Here we have the same logic. Here we have 1, 2, 3, but we don't have clearly 5 candles because the second is an inner candle. So this is the way how you can analyze the market using our tools, and you can trade with gold. But coming back to the beginning, we recommend you to watch the strategy from the lesson number 8, because it has proven backtested history. So let's get back to the questions that we have more to discuss. We discussed how to trade gold. I think I gave you one of the strategies that you can use for trading. At least you can investigate the strategy, backtest it as I did, and decide if it works for you or not. Speaking about analytical tools, actually I showed you 2 bots, and usually I don't use indicators because price is always a primary thing to analyze. And when it comes to indicators, you need to understand that actually indicators are always following the price. Even those ones who tend to predict the price, they use the same metrics: open, high, low, close, and sometimes volumes. But there is no like magic inside this indicator. So that's why using potential support and resistance levels plus the volatility of the asset, like we did, because the number of candles or the size of the candle, it actually measures the volatility, and it uses one of the basic features of the market, that it cannot grow or fall endlessly. Sooner or later it will reverse to average prices. So when we speak about like how to nail volatility, yeah, I showed you the setups where you can understand that, okay, we have this kind of channel, or we have local support and resistance levels, and we can enter into the market if we have growth with 7 of like 5, 6, 7 candles in a row, or if we have huge candles. Okay, then speaking about how to pass the challenge, you see it's very broad question, but I will answer it briefly. You need to have a proven trading strategy. There is no other way how you can pass the challenge. Because if you don't know how to trade, or you're guessing where the market will go, you don't have a background, sooner or later you lose. Even if you have a trading strategy, you may not follow it correctly because you don't trust it. So that's why to pass the challenge, you need to to have a proven trading strategy. B is to follow this trading strategy. And actually, we can help you with teaching you one of these trading strategies that we have during the mentoring sessions. But what comes next is your execution of this strategy. And here it's fully your responsibility. Speaking about the risk management, it's a nice question. We actually are turned back to the educational courses that we have. All of you, independently on the account that you have, if you have full or limited access to the Sabio Academy, you have this first video available. It is always unlocked, so please watch it. And here we discuss all the basic rules of the risk management that we suggest to use. To be brief, I suggest to use not more than 0.2% in each trade. Let me explain you why. Let's imagine that you have, hold on a second. Let's imagine that you have an account of 100K. 100K. Within this account, you have a very small amount of money that you can really manage. This is 6% or 6K. So it means that when you start calculating the risks, forget about 100K. Think about 6K. And when I say that we suggest to use the risk of 0.2% from this amount, it means that your risk per trade, in this case, will be not higher than $200, which will allow you to withstand the drawdown of 6K if you make up to 30 consecutive losing trade. See? And trust me, it's very hard to blow up your account intentionally if you have a proper risk management. Even by flipping a coin, I really doubt that you'll get 30 or even 10 times the same side. It will almost always be the different side because the chances are 50-50 every time you drop the coin. So that's why this is the main rule about the risk management in classic strategies that I recommend. But if you start watching the videos of like about how to trade like with Nasdaq, with Bitcoin, gold, and other strategies, in these cases, the risk sometimes equals the maximum drawdown limit. But in this case, the probability of getting to this risk is really low. And we make all these backtests to prove you that if you use this strategy, yeah, if you lose, you will lose like the assessment with this strategy. But it has never happened in the history, or historically it has happened in 2008, and the probability is really, really low. So that's why there are actually several keys to diversification, like to pass the assessment. The first is to use your strategy with a proper risk management of 0.2%. And additionally, what I really recommend is to get another trading account or several trading accounts to trade with different strategies. I don't know, maybe you've already seen that we have pro packages of 3 and 12 months, and here we have from 3 to 12 trading accounts. And somebody may think that, oh my God, how can I manage 3 accounts or 12 accounts if I cannot manage my one account? At the first glance, it may seem like mission impossible, but in the reality, when you get the strategies that operate on 4-hour time frame, on a daily time frame, you will not spend whole trading day or your whole day in front of the monitor. You'll be just checking the setups when you get the signal, and when you don't have any alerts or signals, you just do your businesses. And when you have several trading accounts, you do not depend on one account, and your psychology works right. You will not be making revenge trades. You will not overtrade because you understand that, okay, this account is in loss, another account is in profit. So one compensates another. So the way how to succeed in trading is actually to diversify your trades. Focus on learning new trading strategies, apply them on different trading accounts. Don't get stuck with one strategy, even if it's profitable. You need to develop your knowledge, and this is actually what we are offering by creating these courses from different authors. Maybe some of you have already watched courses from Marcus Gable, also from Frank or from Wieland. So you need to explore more to get new trading strategies. Okay, let's continue with news trading. I think we have this question also to discuss. Regarding news trading, to be honest, I don't trade news because first of all, if you check the terms and conditions, will make it easier. We'll search news and we'll see that actually trading on news is not prohibited in general, but be aware that when you trade on news, and if your activity resembles gambling, like you trying to guess when you consistently place trades like sell or buy orders like simultaneously, and whichever wins, you simply delete another one and you actually won. But this is not the way how it works. So that's why all of you who think about that, okay, why should I analyze the market during the whole day if I can be at the right time in the right place, just place a couple of orders and then actually benefit from this volatility? This thing may not work. Another thing, that when you trade on news, let's say after news release, you can get into a slippage when your trade is not executed at the price that you expected. And this is a completely normal case, and nobody will return you your money, because if there is no price to execute your trade, when we have news release, we have an extremal volatility, then you can simply lose your money because you wanted to enter at the bottom. For example, you pressed the button to buy and your trade was closed at the top where you should have closed, and then market turned back and it dragged you into the loss. So I'm not trying to frighten you with all these cases. It is just my experience, and personally I prefer to follow the technical path, when you can find different patterns and follow these patterns, something that gives you stable results over a huge number of trades. But when you check any news, let's say you want to trade on non-farm payrolls, and you analyze all the non-farm payrolls releases for last 5 years, on 10 years, and try to build a strategy based on the forecasts, based on the actual numbers, I don't think you'll find a working strategy. I tried to do it with different news, especially I remember it was very interesting to trade oil and natural gas, because these events are very important. For example, for oil, if we speak about oil trading, you have this information release every Wednesday, and you have it on a weekly basis, 4 times more often than non-farm payrolls, and oil is very volatile instrument. But in the reality, when let's say when figures come out better and you expect the price to grow, sometimes it works vice versa. Yeah, so again, due to my experience, this is not the best way how you can trade. So regarding news trading, if you have any working strategies that are proved by a successful history, let it be at least over 1 year of time, I'll be glad to become your student and to learn how we can trade on news, making sustainable profit. If not, let's stick to the strategies that are proven and bring us profits. Okay, what else? What else can we discuss? We spoke about analytical tools. Yeah, we discussed 2 Telegram bots. Speaking about how to trade BTC, you see, strategies for Bitcoin are, in my opinion, they are pretty same to the ones that we have with gold, but with the key difference that for Bitcoin, I don't suggest to play short. You need to look for buying opportunities only, because the trend on Bitcoin is much more stronger than on gold. And coming back to the strategies, we have strategies for Bitcoin as well here in our course, and we have a dedicated strategy for Bitcoin. And here in this strategy, we also perform a backtest, and during this backtest, we show the way how we traded over a period of, here we have one year and a half, the quotes we got that were available at that time, and we actually prove that this strategy is working. We made more than 300 trades. This is a strategy for 4-hour time frame. Then we also developed a strategy for a daily time frame and also made a backtest. And then we actually show you how to apply the strategy at SabioTrade. So this is the direct answer, like way you can get this strategy. But in general, you can use the same instruments that we use to analyze gold and other assets. Okay, what else we have? How to nail volatility, how to trade BTC, news trading, how to pass the challenge. Actually, I'm wondering, but nobody asked about Euro USD. So I would like to show you some interesting cases from hourly and daily charts, because I understand that Euro USD is a popular instrument, and maybe you'll be interested in getting some strategies to trade with Euro USD. So here is the first version of the strategy that you can check. I actually checked it before our meeting. We are on an hourly time frame. Here you can see the number of same colored candles in a row. We're gonna analyze the number like starting from 4. Actually, four candles in a row, and we enter the market. Let me switch back to an hourly time frame, because it seems not to be reflected all these sequences correctly. Okay, we have 7 here, and let's check some of the trades regarding like this strategy and backtest the analytical tool, this Telegram bot, with signals that I showed you with Bitcoin on an hourly time frame, and then we'll switch to the daily time frame. So here we'll obviously follow a very simple logics, that we need to have at least 4 candles in a row, and we need to have at least support or resistance level touched or broken. So it means that all these inner movements that we see here, we're gonna skip them. We don't need to trade inside the channel. So here was like one of the signals, yeah, the price fell, and then we got fourth candle, and actually here at the opening of the fifth candle we could have entered the market. This trade, everything depends on your take profit and stop loss. If they were tight, it could be profitable. If they were like broad, it could be a losing trade. This one was a losing trade. Then let's check, this one was a profitable trade. Here we didn't enter because there were no local support or resistance levels triggered. This one was, I think, profitable trade. Maybe if you were using some kind of like stop loss that could have been triggered right here and you didn't close your trade right here, it could be a stop loss, but in general it was a very, very good entry point. Then we also had the same case here. Here was the entry point. We broke through the previous local high. We had 4 candles in a row and we had this correction. We skipped this because this moment appeared in the middle. We skipped this one as well. We skipped this one as well. Yeah, no local highs or local lows were touched by this level. This one looks good, but let's be honest, our local high was here. Or let's draw a zone here. So we also skip this one. Speaking about this one, we can say that, yeah, we have broken the local high, but I don't think it's a good trade because we have an extreme volatility, and moreover, these candles are inner candles. So we skip it, we skip this one, we skip this one. I marked some of the trades already. So here you can see that we have a sequence of 4 trades, but we didn't touch any support levels, so we skip this one. Then we have 1, 2, 3, 4. Actually, okay, yeah, the third candle is not really good, but at least we have this shadow, and it is not fully in the range of the previous one, so it could have been a good trade. And also I marked several trades more. It's strange, I'm going vice versa. Yeah, I'm scrolling in back, not moving forward. But okay, let it be. Here, this sequence appeared in the middle. No, we don't work. Here we work. We have 5 candles. Actually, we enter here because at the moment when the first candle, when the fourth candle was formed, we didn't break through the previous local low. We didn't even touch it. So that's why the entry point should have been here. Here we had 4 candles. Here is the entry point. Here we had 7 candles. We didn't enter on the 4th because we didn't have the level. So after we broke the level on the 7th candle, it was an entry point, and we can actually scroll it furthermore and look for the same trades, and you can see that I'll be just paying my attention to the ones that I marked previously. You will see that this strategy, in most cases, it works. Sometimes, like here, it didn't work, and it's normal. Yeah, no problem. Like, it's a stop loss. Here we can see that all these patterns, they were formed inside the range, so it is not interesting for us at all. This one could be okay, but to be honest, this kind of dodgy is not good, but still, maybe profit, maybe loss. And a couple of more trades. This one was a good profitable trade. Here we didn't break the previous resistance, so we were not entering the market. Then here what we can say, this could be considered as a previous local low, okay, and here was the entry point because we have 1, 2, then we have inner candle, then we have 3, then we have 4. Here could be our entry point. Here another entry point. So let's switch to the daily time frame, and let me show you one of the signals that maybe you would like to use even today. But please check it responsibly. I'm not calling you to follow this recommendation, just showing you the current market situation. Maybe you'll find it interesting. So what do we have now with Euro USD on a daily time frame? We actually have 5 falling candles in a row. Let's be honest, the second one we're not gonna count it. It is an inner candle. Speaking about the technical analysis, we broke the previous local low. It's obvious we broke another local low. And actually, these kind of movements, usually it is followed by a correction. We had some kind of a correction today, so we can say that this pattern already worked, but maybe there is a perspective, like still perspective, that it may grow further more. So let's check some other patterns. Let's check it, I don't know, let's do it from the beginning of, from the middle of 2024. We'll check only like 1 year. So we had 6 candles here, yeah, but by the way, speaking about the daily time frame, yeah, you need also to consider inner candles. So we have 1, 2, 3, 4, not 6. These ones are disregarded. So here was the entry point. Yeah, and actually, why? Because we broken the previous local high. Okay, the next thing, we had this one, previous local high. We had like one, I'm sorry, I think this is a mistake of numbers, because it shows red and counts as red. So maybe it is a problem of the new quotes that were uploaded, because I see that there are some gaps between these lines. So another trade we had 1, 2, 3, 4. It is followed by a red candle. Pay attention that this is a daily time frame, so that's why even one candle can bring you like in this case almost 500 pips. So this kind of trading, it doesn't require like long-term like investments. You have this 4 candles, let's say you broke the previous local low, okay, no problem, one daily candle is enough. Here I think something is wrong with the quotes, because it shows 1 and 2. So actually we have 1, 2, 3, and we have 4. Then we have this growing candle, and actually we were broken this previous local low. Then we have another local low. We had 1, 2, 3, 4 candles, and we had another growing candle that brought us profit. Then we had these 4 candles, but let's be honest, this one is not really good, and the one in the middle. So this signal could be actually like dismissed from here. And you can actually check the history even without these like numbers. Trust me, on a daily time frame, it's not hard to do. Here was another signal. Actually, it was 1, 2, 3, 4. It was a losing trade. Here we had a profitable trade, but this one was almost an inner candle, so it also could be disregarded. This one, 1, 2, 3, 4, okay, this could be an entry point right here, another potential entry point here, another potential entry point here, and for example here. But here we have 5 candles, so it could be actually here. So this is the way how you can, for example, analyze Euro USD and any asset using some of our tools. So also I think we had some comments. Let me answer them, because I know that Thomas was waiting for answering the question regarding the strategy, the golden day strategy. Yeah, the swaps are really expensive. So what you can actually do here, you can wait till your profit covers the swaps and then close this trade when you reach this number. Okay, this is what we can actually try to do with this case. And if you have a particular case, please send me the screenshot on my email, and we'll go through this situation together. Okay, so let's check what questions do we have, because I think that most of the questions we wanted to discuss, they were covered. Let's check. Oh, Ioannis, I see you. Hello, my friend. I'm glad to see you. Yesterday I had a mentoring session with your colleague. I'm glad that he said hello from me. I'm glad to see you and hope you are doing well. Question about drops 1p1 applied to per package or only for single accounts. You need to check it. You need to check it. I think that only for single accounts, but please check it when you place it and proceed. Will you get it or not? Okay, colleagues, what are the questions you have? Please feel free to write me. I'll give you, I think, 5 minutes more, and then we'll discuss your questions. And meanwhile, if we don't have any other questions to discuss, we can check some recent trades made according to the SabioTrade Waverider strategy, because I know that many of you follow the signals we're giving, and recently we have this kind of a decline. And let me show the trades. Give me just a second. Give me just a second. I need to switch to another account, and I will show you the trades that we're currently holding. Here we go. This is the Australian dollar case that we have. We have 6 trades, as you can see, and we are in a drawdown currently. We have no profit for this week, but is there a reason to get nervous? The drop is 1,500 pips almost. Let's check the history. To be honest, whenever I see the similar cases in the history, actually it releases my mind from that thoughts. So as you can see, in April, we had the introduction of tariffs by Donald Trump, and we have this huge decline, and we opened 10 orders there. Let's measure the distance from the first order to the lowest point of the market at the time to measure the drawdown. The drawdown is, in this case, around 3,800 pips, and we had 10 orders. Okay, we had this situation and we actually survived, and there we were making profits constantly every week, and everything was going fine. Speaking about the current situation, the drawdown now is, you can see, 1,400 pips, which is 2.5 times lower than the one that we had previously, and we have 6 candles, or sorry, we have 6 orders out from 11. So from this point of view, there is nothing to worry about. Let's switch to the British pound. Here we also have several trades, and this situation may seem like pretty nervous here. We have 5 open trades, but let's check the history. Did we manage to handle these kind of situations in the past? Here we had 5 candles, and the maximum distance was up to 3,000 pips. Okay, maybe something interesting in the past. 2,000 pips. this distance, 2000 pips. And let's check this one, around 1000. And so actually the maximum that we encountered this year, starting from the beginning of 2025, was 3000 pips and 5 trades, if I'm not mistaken, right? Let me check it. Yeah, before we close. What do we have now? We also have the similar situation of 3000 pips and 5 trades. So it is also a pretty regular situation for this currency pair. So hopefully today in the evening or maybe late at night, we're going to see the correction and close all the trades with the profit. So, okay, regarding the questions, I see that there are no questions. So no questions. Okay. If you have no questions, colleagues, please feel free to ask me anything in comments in our trading chat or book a mentoring session. And let me share the bots with you. We have price impulse bot, or let it be better, I will send it to you as a link to join, and another one. So you can join to these bots and start analyzing the markets in a new way, or continue analyzing the markets. And I hope that these kind of like light versions of strategies for gold and for Euro USD will help you to make good profits. So I wish you all the best and hope to see you on the mentoring sessions. Good luck and goodbye.